tech has had quite the run since the beginning of this year. Just look at the FANG stocks. Netflix alone up over 100%. Wow, just amazing. Are these names still worth buying for the second half of the year?
Oliver Pursche from Bruderman Brothers and Matt Swanson from Silicon Valley Software Group join us now. Hi, guys. Good to have you on. Matt, what do you think? Does this outperformance continue? Are they going to be able to grow revenues and profits enough to justify these moves?
I think there's a lot of reasons to be excited about all these tech companies. I think that there's trends on each of the big FANG stocks that are going to come to fruition as the year goes on. Google with Waymo, Amazon taking over new verticals every day. So yeah, I think each of the stocks has justification.
Matt Swanson, enough profits to justify these incredible, Oliver, enough profits to justify what have been really incredible moves? Are these valuations justified?
Well, we're getting very cautious on some of the stocks out there, especially things like Netflix that's up, like you said, Wilfred, over 100% year-to-date alone. Some other big names are up sharply. We started taking profits in late April, in part because that portion of the portfolio has grown so much as a result of the appreciation that it's simply prudent to do. I would say this to investors: it's important to bifurcate technology investments. You've got to be in it, there's no question about it. There's certain names that you want to own as core portfolio holdings that you just want to weather the storm. But other more alpha-generating names, perhaps some smaller and mid-cap names, you want to be a little bit more tactical about. And if they're up 30, 40%, like some of these names are in a market that's essentially flat or down year-to-date, you take some profits.
Oliver, in terms of something like Apple, which has many links to China, whether it's in sales or in production, are you concerned about the trade war? I feel like Apple has not reacted to the same extent, not with the same delta as, say, the auto stocks or some of the chip makers have when we've had days of bad news on trade.
Yeah, so we own Apple. We like Apple. Of course, we're concerned about any trade war and their impact, as it's going to be far-reaching if it does occur. So far, it's really been trade war rhetoric. There hasn't been a trade war, and the imposition of tariffs have been, considering the size of the global economy and the U.S. economy, relatively small. That doesn't mean that certain industries aren't going to be affected. As it pertains to Apple, it's a core portfolio holding. We've owned it for many, many years and want to continue to own it, and that's the type of stock that we're going to continue to buy, especially on pullbacks.
Matt, what do you think about Apple at this point? Do they have any products that excite you, or is it just that they've created an ecosystem that retains a lot of customers?
They've been very effective at containing with their ecosystem. Not a whole lot of innovation that I'm seeing. One of the exciting things that I think will come to fruition this year is Apple Business. A lot of brands are trying to handle more customer interactions through messaging. Brands haven't embraced things like Facebook Messenger. I think there will be more welcome to Apple Business Messenger. And I think that's going to present an opportunity for Apple to wedge itself into the consumer purchases for really the first time. And that's going to be a lot of upside.
Matt, on Google, on Alphabet, you like it, but particularly because of a subsidiary that maybe we don't talk about quite as often as we should.
Yeah, I mentioned Waymo because I think that they really do have the lead. I think before the lawsuit with Uber, before really Travis got the boot, Uber actually had the advantage. It takes someone like a ruthless person like Travis to take on a Google. But with Uber out of the way, Google's biggest threat now is GM. And what Google has that GM doesn't is maps. And that the mapping data that they get from consumers gives them all the preferable routes. And so they're going to be able to progressively roll out their self-driving offering, not broad-based across the country, but in very limited geographies, capture consumer adoption, all while maturing level 5 technology.
Oliver, when it comes to Google, are you thinking about it as anything else but an advertising company at any point? I look at their earnings report. We talk about all these things that Google does, and yet I see the revenue numbers, and it's ads, ads, ads. All this cool stuff that Matt's talking about. Does it play into your thoughts about whether or not you own Google?
Well, we like Google. We own Google, specifically the A-class shares. Look, I mean, you know, what Google is working on, and Matt, I think, is absolutely correct. They're working on a lot of exciting emerging technologies, and so you're not going to have revenue lines associated with those. But what they're doing is they're planning for tomorrow and the day after tomorrow. And while current revenues from advertising are incredibly important, they're using that revenue to expand their offering, to come up with innovation. And that's what's exciting about Google, because if it was just about advertising revenue, we wouldn't like it as much.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.